Firstly, overall though, where have we seen most activity centered around in the fixed income space this week?
Sorry, I didn't get that.
Where have we seen most activity centered around in the fixed income space this week?
Well, there's been a lot of activity. Obviously, the Treasury bill market. There was an open market operation yesterday, and the primary market auction also yesterday. So big volumes issued, and the market has been very active on the short end.
Taking a look at that auction, of course, we saw those yields coming in below 14% for that short-term paper. Any indication from your perspective right now that we're going to have a drop in the MPR anytime soon? We know that meeting is coming up on the 16th of May, and by all intents and purposes, most analysts are saying right now that it's too soon to drop the interest rate given the inflation outlook and, of course, concerns around the oil price.
Yes, I mean, the T-bill is under 14. I guess it's a significant pullback from the earlier levels in January, around over 17. But the challenge, obviously, for the central bank is the inflation uptick for this month, and also the exchange rates. I mean, as you just said earlier in your article, the Naira ended up down today. It's probably at a 6-week low. And obviously, the central bank is trying to hold that rate steady in order to keep inflation in check, among other things. So it's probably not going to impact the MPR soon, but I mean, if the rates keep going down and we start seeing T-bill rates, under 12%, then it might be a signal to the central bank that it's a good time to start dropping rates.
Let's talk about the currency, because as you say, it's sitting at a 6-week low right now. Is it rising risk aversion, foreigners coming out of the Nigerian market to repatriating their money that is perhaps putting some pressure on the Naira?
Probably not. I mean, the band is quite narrow. It's probably, the 6-week fluctuation is probably a less than 1 Naira movement. So it's well within the central bank boundaries. And given the kind of low rates that happened at the auction for T-bills yesterday, clearly there's still a lot of foreign money coming in. So it's just regular demand and supply patterns. Okay. Nothing unusual.
Of course, we're going to be looking closely at that sovereign debt auction that takes place next week. 35 billion naira in 5-year bonds and 35 billion naira in 10-year bonds being issued. Any reason why this time around we're not seeing those 2014 bonds being issued?
Well, I mean, the auction next week, I mean, we still need to get to next week to be sure if that auction will happen next week, given what has happened in the past few months, where the auction date has been moved to coincide with the release of federal allocations. Those allocations are not coming out next week. So there's some chance that the auction won't happen next week. But in terms of the short-dated below 2-year bonds, I think there was an agreement. The DMO did have an agreement with the primary dealers that is going to stop issuing that instrument from the last auction. Also, there's really no reason for the DMO to be issuing short-term paper, almost competing with the central bank that goes out to 1 year when they're supposed to be financing long-term development from the borrowings. So that's why they're just sticking long-term. So there was an agreement not to issue any more short-term paper.
Let's take a look at the play between the equity market right now and the fixed income market, because of course we saw quite a strong rally coming through for the overall equity market and taking some shine away perhaps from the fixed income space where yields are still above 15% right now. Do you think that the momentum in the equity market has started to wane right now? Are we going to start seeing market participants moving back into the fixed income space?
Well, I think, I mean, for anybody who's been in this market over the past 3 years, it's generally a good idea to take your gains when you have them. So obviously this week there was a bit of profit taking, and for the professional investors, it's probably a good idea to take your profits when you're up 20% and go park your money somewhere else, maybe in some bonds yielding well over 15%, at least for the short term. Obviously, you have to be careful not to have any capital depreciation in those bonds or the T-bills if you go that way. But clearly, there's not a lot of activity between now and the next quarter release of results. So we could see a lot of sideways trading from now until then.